All right, let's start with this. Google researchers, they say they found a way to allow more efficient use of storage needed for AI development. All has to do with compression, that compression thingy. Google said the turbo quant technology can cut the amount of memory required to run large language models by at least a factor of 6. So this would reduce the overall cost of training artificial intelligence. Investors harbor some concerns that it could reduce hyperscalers' need for memory, and you're seeing that play out in some of the stocks like this morning, like Micron Technology and Sandisk Corporation. Now, Morgan Stanley analyst Sean Kim writes in a note, the impact on the industry should be more positive because eventually it affects a critical bottleneck and improves the efficiency of what's known as the key value cache used for inference or running AI models. Like a lot of the bulls in the AI industry and the analyst community, he cites the theory known as Jevons paradox. This is a concept from an English economist. It had to do with coal, saying the more efficient technology becomes, the more demand is going to rise.
I see.
That was during the Industrial Revolution.
Interesting.
Yeah,
like that. Right.
Tom remembers that. Insurance is not boring. Equitable Holdings and Corebridge Financial set to merge in an all-stock deal.
Really?
This values the combined business at $22 billion. So the retirement asset and wealth management giant would be called Equitable and manage $1.5 trillion in assets with more than 12 million customers. So I guess they're getting rid of the Corebridge name. Anyway, the Corebridge CEO, Mark Constantini, is going to be head of the combined entity. Equitable's Mark Pearson will become the executive chairman. Corebridge had a market value of about $12 billion as of the close yesterday. Equitable had a market cap of about $11 billion. So the deal expected to close by the end of this year. And following the deal, Corebridge expects to transfer about $100 billion of assets to Alliance Bernstein.
Yeah, now we're talking.
The investment manager majority owned by Equitable.
Yep.
Oh, there you go.
And you want the bankers on that deal?
Yeah.
Goldman Sachs advising Equitable and Morgan Stanley advising Corebridge, so the blue bloods getting
What's
paid.
their take on this, do you suppose? I mean, it's not too shabby, the banking fees.
Oh, they'll get a nice, this is a nice, you want to advise the seller, you get a higher fee for advising the seller.
I haven't checked the league tables in a while. I got to do that. Pony.ai, ticker symbol Pony, delivering its first profitable quarter. But here's a bit of a rub. The profit's not from its main robotaxi business. It's actually from one of the early investments. Net income reaching $75.5 million. Revenue climbing 20% for the year to $90 million. The investment game wasn't specified, but the Pony.ai unit was an early investor in the chip designer More Threads, and they had a bang-up quarter. Pony.ai has set a goal of deploying robotaxis with partners in more than 20 cities worldwide this year. They did say late last year they plan to grow their global fleet to 3,000 this year.
Right.
Pony.ai and Uber started testing driverless cars in places like Croatia, expanding their partnership.